Hey everyone, welcome back to Upside Down Data. In this video, I'm going to take a look at risk indicators for a couple of dozen of the top assets, and I'm going to pay particular attention to Quant because, as you might have seen, and as you can see up here on this chart, Quant has been running really substantially recently. It's been outpacing the market by quite a lot. So we're going to take a look across the market and see how Quant is an outlier in this market environment. So if you guys like the content, subscribe to the channel, give the video a like, and let's get into it. So I have the daily chart up here for Quant. And as you can see, it's been on a really nice run over the past couple of weeks. Even more than that, really, the last significant bottom here in terms of market structure was back in early September. And since then, Quant has put in a nice measured move of 160% to the top. And with this pullback ongoing, it's done more than a 2x in just a little bit over a month. If we go back a little bit further, even, and we find this bottom all the way back here in June, we can see that Quant really put in an incredible run to the top of this wick. It put in almost a 6x, and even now with the pullback that we're seeing here, 360%. So, well over a 4x move from the bottom there back in June. If we look at the Quant BTC ratio, we can see just the extent to which Quant has outpaced the market over this period of time. So it's not just that Quant has been running, it's that Quant has been running when Bitcoin and the rest of the market have been doing quite the opposite. And this is really remarkable. Most of the time, altcoins will bleed against Bitcoin during a bear market. Um, we try to identify assets that hold up relatively well against Bitcoin during bearish market conditions. Another example of this is BNB, which is, as we've pointed out in other recent videos, has been holding up quite well over the course of this bear market, even put in an all-time high relative to BTC. But Quant is really just in a league of its own here, um, absolutely pumping relative to BTC over the past few months. Um, and it's a good time to take a look at Quant then and see how it's performing and what its outlook is likely to be relative to the other assets. In specific, with this pullback coming in here on Quant, this is the first red day that we've seen in a little bit for Quant. And so the question is this pullback granting an entry for continuation? Or alternatively, is this really a place where you'd want to be unloading your Quant if you're holding a position? So what I'm going to do here is I'm going to pull up the UDPI, the upside downside potential indicator for Quant, as well as a number of different assets, because I want to give us a sense of how Quant compares right now. So here we have the upside downside potential indicator. This is our in-house risk indicator for a number of different top assets. This interface that you're seeing right here is a screenshot I'm just taken from our website, which is under development, which is going to be released to the public soon. And this is going to be one feature on the website here that we're going to see is these grids. We have the short, medium, and long-term UDPI risk. These are references to the time frame that we want to use to interpret these. So the short-term time frame is a relatively quick indicator that responds on a time frame of days to weeks, whereas on the other side of the spectrum, the long-term UDPI is meant to be interpreted on a scale of months and longer. So these are complementary pieces of information that are responding on different time frames. The green here are favorable risk to reward ratios. They correspond to negative values. This runs from -5 to +5. So negative values means that there's more upside potential that the model considers to be realistic on that time frame than downside potential. And the opposite is true when we see positive values. They get into the red. That indicates that the model considers much of the realistic upside potential for that asset over that time frame to have been realized and more downside potential to have opened up. So as you've probably noticed already, Quant is an extreme outlier on this chart. I mean, if we start over here on the left of these UDPIs, the short term, we can see that Quant is coming in hot at plus 2.67. Nothing else is even close. We don't have anything else in the positive territory across all these assets. This is many of the top 50 assets here, almost all the top 25, and Quant is an extreme outlier. In terms of market cap, Quant has risen into the top 30 with this recent move, but that might be short-lived because what this UDPI information is telling us is that Quant has really um, exhausted a lot of its realistic short-term upside potential. Just an incredible move here that's gone to an unsustainable degree, and that's reflected in the UDPI. Um, you might counter and say that this scale goes up to +5. So there is still room for Quant to run from that perspective. This is analyzing its own price history and price dynamics, and so it wouldn't be unprecedented in Quant's history to keep running and get up past +3, +4, and approaching +5. The problem with that reasoning, though, is that the market conditions as a whole matter a lot, and when we see that almost every other asset is quite uh, oversold from the perspective of the UDPI, meaning that we have deep green negative values here for most of the market. That suggests that Quant, even at a plus 2.67, is really an aberration. It's really getting away from the rest of the market to an extreme degree. And um, in bullish conditions, we would think that it's more realistic for an asset to keep running all the way up to those levels. But under bearish conditions, you have to keep in mind that higher risk levels become more unsustainable. So this is really important to interpret relative to market conditions as a whole. During bearish conditions, higher values are more unsustainable. During bullish conditions, lower values are more unsustainable. So keep that in mind. Another thing that we can see here, which is useful, and I recommend keeping an eye on as you get used to using these indicators and looking at this grid, um, is the relative values across timeframes. One thing that you'll see happen when an asset runs really, really hard and becomes overextended is that the short term values will become more extreme than the longer term values. We see that here. On the short term, Quant is up at a 2.67. On the long term, it's only at a positive 0.43. So, from a long term perspective, Quant is actually not super overextended and could plausibly continue to run. It's just that that's on a longer term perspective, and the shorter term time frame is more extended than that. It's gotten out ahead of the long term risk level, and that usually doesn't last. Um, we usually see that when the shorter term timeframes get out ahead and get more extreme than the longer term ones, that will revert. At a minimum, what that would translate into on the price chart would be some consolidation, if not a pullback in terms of price, because time or price would, a correction in terms of time or price would allow the risk levels on Quant to reset a bit. And so um, from the perspective of this risk indicator, we wouldn't be looking for another entry into Quant until we saw a reset on uh, on the short term risk. And the first thing that we'd want to see there is the risk on the short term getting back down below the risk on the medium, and then ultimately the long term perspective. But I think even more than that, there are just a lot of other opportunities on this chart. So we're focused here on Quant, and what this is telling me is that rather than looking for an entry here on Quant, I think that we would be looking for other opportunities. This is not financial advice, but this is how we think about these indicators and using them alongside each other. So when you look at an array of assets like this, and you see opportunities like, let's say, Solana, which has a long-term UDPI of minus 4.52, nearly bottoming out. Dot is also very attractive on the long term, as are assets like AVAX, near HBAR. And if you wanted to branch out beyond layer ones, a lot of these are layer one assets. You've got assets like Sand and Helium Network, um, even Engine Protocol, if you want to get some exposure to the gaming sector, which are on the long-term perspective really attractive in terms of risk to reward ratio, and many of them also on a shorter term perspective too. So Solana across the board here looks pretty attractive. Dot to a large degree as well. Near Protocol on the short, medium, and long term is showing a lot of upside potential. So, um, you know, if you have a quant position here, I think that this is a good reason to think about unloading some of it, taking some of that risk off, and potentially reallocating it toward lower risk assets. That's I think what's suggested by this chart. Um, I don't have a quant position, full disclosure. So I'm not looking to get an entry here. I do think that the fundamentals of this asset are strong. And the price action historically is quite interesting on quant too. This is not the first time that it has, you know, seemingly decorrelated from most of the market for at least a stretch of time. So, interesting to take note of, and potentially something that could help round out a portfolio again in the long term by decorrelating a little bit from many of the other assets that you're likely to be holding. But again, it's looking very toppy right now. If we go back to the chart, here's the BTC. But if we go back to the USD chart on Quant, we see an enormous spike in volume on yesterday's daily candle, along with this long wick uh, to the upside, which shows that a huge quantity of sell pressure came in as the price pumped up over $200. So not an entry here, guys, in my opinion. Again, not financial advice, but looking very toppy here. And bring it back to this chart. If you're looking to continue dollar cost averaging, and this is certainly the phase in the market to be accumulating, um, take a look at some of these other assets here that have really favorable long term and more tolerable short term entries. So that's how Quant is looking right now. That's how a number of the other assets across the market are looking now. Hope you guys found this useful, and thanks for watching.